A very good morning and welcome to Business Point on Global Television, a program where we highlight business issues concerning Nigeria as we look at major developments from maritime to trade to finance to aviation and every other sector in the Nigerian economy. Let's go for a short break, and when we're back, Business Point continues. So this morning, we begin with major development from the aviation, trade, financial, maritime, and economic sector shaping Nigeria's business landscape this week. And the first story we're bringing to you this morning, Tinubu excludes FAAN property from sale. All right, so President Bola Tinubu has ordered that all properties belonging to the Federal Airport Authority of Nigeria, FAAN, be excluded from the ongoing sale of government assets. The directive comes amid growing concerns over the indiscriminate sale of public assets and fears that critical aviation infrastructure could fall into private hands. Reports indicate that President's decision was influenced by security consideration and the need to maintain government's control over key national assets like airports, runways, and navigational facilities. All right, so economic experts are actually talking about this particular decision by President Tinubu as it demonstrates the administration's cautious approach to privatization, because a lot of time when we come on this platform, we talk about privatization and what it means for Nigeria to actually go into privatization, selling, giving national assets to those who are in the private sector to help make sense of it, to make money, and in return also, give it to the government to be able to privatize those properties and make money out of it. Because, come on, in the world of business, privatization is one way where government can, give out its assets and make gains at the end of the day without being directly involved. Because in Nigeria, there's been a lot of talks about the fact that when government get involved in some of these things, they don't know how to handle it well. And we've seen it a lot. People point to the NNPC as an example and say that the Nigerian government has been managing the NNPC from inception, and it seems not to be working. So some of these Nigerians actually bring these claims, and they say it is better we privatize these assets. But the federal government is saying, yes, we would think around privatization, but when it comes to properties owned by the Federal Airport Authority of Nigeria, let us be more cautious. And that's what we're seeing President Tinubu has said with key assets like our airports, our runways, and navigational facilities. But there are also other discussions, because in places like the UK, we know that even international airports in the UK, some of them are privatized and are given to, they're actually given to private business people to operate. After all of those documents are signed with the government, and they could make returns to the government, and the government makes money out of that privatization at the end of the day. That's very clear. But here in Nigeria, that talks about the fact that, if we allow government to actually, own these properties and run the privatization, are the people going to be truthful? Are they going to pay the workers the wages and the demand? And how the long-term effects of privatizing national assets into individual hands? And that talks about the fact that it means government do not do business. And some persons have said, government can actually do business. And they point to example like Aramco in the United Arab Emirates, owned by the government, and is doing very well, their national oil company. Is it because the Nigerian government business have not been running so well, but we'll give it to the airport authority. That is one particular place that you see efficiency. Nigerian airport is doing amazingly well. I like to say that on air, but the government is saying when it comes to assets like airports, our runway, and our navigational facilities, we have to be a little bit cautious, and that's what we're having. So experts are also saying that exclusion demonstrates the government's cautious approach to privatization, especially for a strategic sector like aviation. While asset concessioning can boost efficiency and private investments, analysts also warn that selling off core transport infrastructure may compromise national security and long-term economic stability. So the directive is seen as a move to balance public ownership and efficiency, protecting the nation's air gateways while also seeking reforms to management operations. So there are this discussion: how do we bring all of this to a table? How do we manage our reforms and seek reforms? Because this government has been very bold with reforms, but how do we make sure that we still own the core operations? Because our aviation system, if it is compromised, can actually damage national security. And it is one thing no government will want to compromise. And we are seeing that with the government saying, let's hold on with asset selling as far as the Federal Airport Authority of Nigeria is concerned. And the government is saying that very clearly, that this is what we want at this particular time. We hold on with assets when it comes to the Federal Airport Authority of Nigeria. We could talk about concessioning, we could talk about privatization, we could talk about seeking reforms, and how we could talk about management, operative and operational guidelines to bring in more efficiency. But let's hold on with privatization at this particular time. All right, so we'll take the next story that we have this morning, the next business news. It says, weak regional link strengthens AFTA's revenue potential. Weak regional link strengthens AFTA's revenues potential. All right, so experts have raised alarm that poor regional integration continues to threaten the revenue potential of the African Continental Free Trade Area, despite the agreement's promise to create the world's largest free trade zone connecting 1.3 billion people across 55 countries. But there are issues, and I think let's talk about this. We had this agreement, the African Continental Free Trade Area Agreement, that actually talked about area covering more than 1.3 billion people who are connected to a free trade zone. So we have, these are regions that you don't need to go through all of the normal you don't need to go through all of the normal documentation or payment for land, this, that, and all of those other things for you to be able to, start a business or start a factory or start a company in those particular places. We have it with like the Lekki Free Trade Zone where we have in Lagos State. You see a lot of companies building. It is actually government opening up space and saying we encourage investors to come in and do business in this particular place. We are going to be providing electricity, at subsidized rates. We are going to be providing the facilities and infrastructure needed to actually do this business. And the government, is very clear as to that particular thing, and it just picks up. But experts are actually warning that yes, it may be working very well in other countries, but in Africa as a continent at this time, or maybe in even other continents, we are having difficulty because the revenue potential of the African Continental Free Trade Area has not been actualized. And these are discussions that are ongoing, right? As these experts are actually raised alarm as to the poor regional integration. And these are concerns that we have to talk about, because a couple of friends have mentioned the fact that if you're traveling around Europe, right, and you have the Schengen visa, you can move from one European country like Germany to the other without stress. But in Africa, it is very difficult for you to move around Africa even with your green card. It is very difficult for you to move around Africa with your Nigerian passport or even your Ghanaian passport, as those who are from Ghana. Or all of these bottlenecks as regards integration, as regards transportation. The transportation system in Africa, seems to be very weak, right? We don't have like a train system that could take you from one country to the other. The aviation corridor seems to be very narrow. Maybe you have flights once a day to other African countries and all of that. So all of these are things that are actually pulling back our business, and experts are raising awareness that this regional integration continues to threaten our regional potential as a continent, especially when we look at the African Continental Free Trade Area, the AfTA, and what it was meant to do. Because I remember when the signing of AfTA, there was a lot of excitement, and people talked about the fact that, all right, now we have AfTA, there's going to be more regional integration as to business. More Africans are going to be doing business with each other. We're going to see Africa, come out and put out those big numbers as far as business is concerned. But it seems that this has not been the case, because the case was that we are going to create the largest free trade zone area in the world, connecting about 1.3 billion people across 55 countries. This was the dream of AfTA at the time. But experts are saying that issues of weak transportation network, and we need to talk about this weak transportation network, because it is very important at this time that Africa should have a connecting system that could connect the whole continent, where goods can move from one place to the other. In no time, you could send goods from Johannesburg, do business from Rwanda, and you get to maybe Kenya, and somebody is down there in Liberia and is doing business with somebody in Ghana, and we have this back and forth of system that works, especially transportation. So we need to sit down and rethink our transportation system as to how to actually move. And I think those are some of the recommendations that experts are giving as to what will help AfTA work well in Africa. There's also talks about high tariff, right? Even for Africa, bringing products from Ghana to Nigeria could be very costly. Bringing products from South Africa to Nigeria, you have to pay the tariff, the custom duty, you have to clear the containers. And those of us in Nigeria, we know what goes into that particular process. I've done some interviews before where I spoke with some business people in one of the markets here in Abuja, and these are people that bring in products from all over the world. And one of the complaints that they gave was that the amount they even buy from those countries, sometimes to clear a container, it's in millions of naira. Somebody mentioned a figure as to 7 million naira to actually clear one particular container. And this is not just things you bring from Europe, even things you get from other African countries. There are also concerns, right? Logistical barrier also persists across Africa. But for Nigeria, the challenge is not about policy, but execution. In Nigeria, we know in Africa we have poor roads, not only in Nigeria, and these are things that are hindering and are standing as crisis to the African Continental Free Trade Area agreements that we have, the AfTA Act. In poor road transportation in Africa, a lot of African countries, are struggling with roads and all of that. Unreliable ports. It takes a long time to be able to clear, some of these goods at the port, and these are issues that should be of concern to any Nigerian or to anybody who really wants to do business in Africa at this time. There's inconsistent custom procedures, and it makes it difficult for some goods and services to move efficiently across border lines in Africa. So a trade economist, Dr. Dayo Teribe, said that unless regional governments invest heavily in infrastructure and harmonize regulation, after risk becoming just a paper policy with little or real economic benefits for Africa. He added that Nigeria must prioritize rail links, broader modernization, and digital trade platforms to be able to take advantage of the intra-African trade opportunities that we have in this particular country, because the success of AfCFTA depends not just on signing agreements, but in building physical and institutional bridges that connect the African economy, right? So I think that if Africa comes together to actually think of how we can connect our economy is actually very connected. Look at Niger, for instance. It is very connected to Nigeria. Nigeria is very connected to the Cameroon. Nigeria is very connected to Ghana. There's all these linkages, but we must find a way to do business as a people and put out our business, put out our best foot forward, and this integration. So some of the things that have been mentioned, talking about transportation, talking about infrastructure that could help Africa to actually go ahead and do this business very, very well. All right, so let's go for a short break, and when we're back, we'll take the remaining business stories that we have for you this morning. My name is Ubong Osoro, and this is Business Points. All right, welcome back. If you're just joining us, this is Business Points on Global Television. And now we're looking at other business stories that we're trying to track for you this morning. Equity markets rebounds as investors gain 2.59 trillion naira. That's about 2.59 trillion naira. That's what investors are actually gains, right? So the Nigerian stock market has recorded a major rebound, with investors gaining a total of 2.59 trillion in market capitalization after days of mixed trading. The positive rally was driven by renewed investor confidence in key sectors such as banking, telecom, and industrial goods. According to market data from the Nigerian Exchange, an all-share index rose significantly as investors reacted positively to the recent central bank reforms aimed at stabilizing the naira and improving liquidity in the foreign market. This is actually a very good and very good news coming in from the business market at the moment, as investors are making gains in Nigeria, and we've seen equity markets, rebound after that particular Trump speech, where the market went slow at a time and even went low at some point. Remember, before Trump actually came out to talk about Nigeria being a disgraceful country, we had already recorded the lowest amount where a naira was trading for $1 in a day, about 1,420 something, and that was phenomenal, right? Due to renewed investor confidence, due to where a lot of cash, a lot of funds were being invested in Nigeria, maybe with a subsidy closure, right? So we now have forex to actually put into the Nigerian economy, and we saw that particular triple, and that market was actually doing very well and rising, and we could see all of that gains coming. But with the Donald Trump speech about Nigeria being a disgraceful country, a lot of investors looked at the dynamics, and maybe the market was a bit shaky at a point, and we even complain about it, where the naira actually had to suffer as it had to go to 1,480 after it had already gone to 1,020 something, right? Making some percentage of losses and all of that. And investors were cautious. Let's see what is going to be the foreign policy of the US. Is the US going to do this? But at this time, we are proud to actually announce, because of the news that we have coming in, that the equity market has actually rebounded as investors in Nigeria have gained 2.59 trillion naira, and we're seeing the Nigerian stock markets now recording a major rebound, and investors are actually gaining confidence and putting all of these things into the market capitalization. And it has come after days of big trading and people thinking, what is going to happen? Is Donald Trump going to strike? Our business partner are going to do business with us? The US is one of our biggest business partners, right? We mentioned that the European countries going to continue doing business with us, those of us in Nigeria, and yes, they've continued doing business with us, and this is where we are. It is we've seen more investment in the banking sector. There've been prominent investment in the telecom and industrial goods sector. Wonderful, wonderful news coming in. So financial analyst Bismarck Rwanda described the rebound as a corrective phase in investor sentiment, noting that Nigeria's equity remained undervalued compared to emerging market peers. Explained that if monetary policy remains stable and inflation slows, the market could sustain its upward trend through the fourth quarter. All right, so this rebound signifies that investors are regaining trust at the Nigerian market, although analysts also warn that volatility remains a risk amid the ongoing macroeconomic uncertainty. We'll take the last story for this morning. The story says, the business story that we have for you, it says NIMASA strengthens safety training for dock workers. So provide the Nigerian Maritime Administration and Safety Agency, NIMASA, say it is intensifying efforts at professional training for dock workers nationwide to improve port operation and efficiency. All right. So the Director General of NIMASA noted that the maritime sector plays a vital role in Nigeria's economy, handling over 90% of our external trade. The new initiative will include safety drills, certification programs, and compliance with International Labour Organization ILO standards for dock operatives. So maritime workers being trained will help reduce workplace accidents, boost cargo handling and productivity, and prepare Nigerian ports to compete better with the West African sub-region, right, when we have better people who are trained to actually be in that sector. So by prioritizing worker safety and capacity building, NIMASA helps to reposition Nigeria as a regional maritime leader and gateway for African trade. All right, so we'll take the last story for this morning. We'll just push it in. Power insecurity threatens business stability and profits. This is coming from the Central Bank of Nigeria's survey. So the Central Bank of Nigeria has identified power shortages and insecurity as the biggest threat to Nigeria's business stability and profitability in Nigeria. The survey revealed that manufacturers, traders, service providers are struggling with high energy costs, frequent blackouts, and insecurity that disrupts supply chains and distribution network. Many firms say they now rely heavily on diesel power generators, rising operational costs and reducing competitiveness both locally and globally. I think this is something we'll need to analyze maybe another day on the program, but that is the much we can take this morning on Business Points. Remember, like I say every day when I come on the program, that a business is all that we do, and business is life, and Global Television actually means business, and we mean business. My name is Ubongo Sora. I was standing in for my colleague Kike Lomo Okere, the queen of business, and I leave you by saying, do business. Make sure that you do some good business today. Global Television means business. Bye for now.